Hi, and welcome to Finextra at Sibos TV. And today I'm talking to Chris Major of BNY Mellon. And we're going to be talking a little bit about technology and trade finance and global payments. So, at Sibos at this show, there's a lot of talk about technical advancements, especially in those areas. Are these initiatives mostly cost-driven or are they client-driven?
Definitely client-driven. U.S. and other North American corporates are increasingly asking for sophisticated solutions, electronic payments, as well as continuing to support the paper payments that still exist in our payment system. And so supporting clients in the areas such as trade finance, for example, means giving them access to open account platforms, along with the associated reporting and information management solutions. And banks are expected to provide these solutions in a cost-effective manner, which is a real challenge for some of the smaller and mid-sized banks. So when they consider the cost and the time to market and technological risk in providing these increasingly sophisticated services, considering strategic outsourcing relationships becomes a viable alternative for them.
So Sibos is taking place in Toronto this year in North America. Is there anything particular to the North American market in regards to outsourcing that we should know about?
Sure. Well, one of the great ironies of the North American treasury management industry is that while corporates, especially U.S. corporates, have a huge appetite for sophisticated treasury solutions and electronic payments, they continue to make a lot of payments via paper checks. So this presents a real challenge for both the corporates and the banks that serve them, because maintaining that paper-based infrastructure is very expensive and requires a lot of investment to refine it, to add new capabilities to better handle the paper checks via imaging, for example. So the challenge that banks have is to both maintain that infrastructure and to enhance it with new investments to capture the paper check images up front in the process, so that the paper is out of the process and is handled electronically via an image process going forward. And not just the paper check, but also the associated remittance information that comes with it and needs to be captured and stored. So this presents a significant challenge to smaller and mid-sized banks. It's not enough to just maintain the old paper-based infrastructure. They also need to add these imaging capabilities that are very expensive to add it and maintain for a payment type that is still prevalent but slowly declining over time. So for these banks, considering strategic outsourcing solutions, private label outsourcing solutions, can be a viable alternative to both maintain their ability to support paper payments for their clients and do so in a cost-effective manner.
Yeah, I mean, sort of like the small to medium-sized banks are almost an endangered species in the transaction banking world. So, I mean, is outsourcing really sort of almost their only chance of survival?
I don't know if it's their only chance of survival, but it is definitely a key strategy for survival. Nobody knows the local market needs and the local client needs as well as the local banks that serve them. On the other hand, these clients, even smaller companies, are asking for increasingly sophisticated solutions. They have the same treasury management needs that a lot of the larger corporates have. So it's very difficult for the smaller banks to invest in the technology and infrastructure like the big banks can. So strategic outsourcing, including private label outsourcing relationships, is one way that they can continue to support those payments for those clients and maintain themselves as a viable participants in the transactional marketplace.
Excellent. It's very interesting. Thank you very much.
You're welcome. Thank you for having me.